Ladies and gentlemen, welcome. Team Europe is proud to host the third edition of the Capital Markets Seminar and delighted that the European Commission this year has joined as host alongside the European Stability Mechanism and the European Investment Bank. The European Union institutions crafted a coordinated response to the pandemic, and markets, I think, increasingly recognize the significance of this European recovery package. So, by definition, a discussion on recovery and economic outlook will be an important and essential feature of this event. Another important theme will be innovation. Innovation in finance, innovation in regulation. And why that? Because the climate challenge, the fight against global warming, imposes a general response from all of us, and including from the markets. And the European Union, being the first place where green issuance took place, has always played some sort of role of a leader, of the thought leader, and we think that Europe is there to contribute to global solutions. So part of the seminar, of the discussion, obviously will be about the latest features in EU sustainable finance regulation with implications to Europe and globally. And let me give you one of these examples of innovations for the European Investment Bank. For us, we've been the first one to integrate taxonomy as an element of definition of our green bonds. We have aligned, as you know, the documentation of green bonds on taxonomy. And we have also more than that. We have decided to integrate, and we've started to integrate taxonomy across the entirety of our balance sheet since the beginning of this year, since January. All the investments we consider, be it for lending or quasi-equity, must be aligned on the Paris Agreement. So in short, we know that the recovery needs to be sustainable and needs to be sustainable to secure the resilience of the economy and actually to secure the future of not only ourselves but the generations to come. The EU institutions are dedicated to such a just and sustainable future, and we hope to show you the art of the possible in this challenging task.
Thank you, Bertrand. Thank you to the EIB, ESM for the opportunity to participate again in this conference. It's hard to believe that it's just 1 year since I spoke at this event. So much has happened in 12 months. We've issued 90 billion euros in sure social bonds in 7 large transactions. And as you learned today, when you listen to Commissioner Hahn, the Commissioner for the EU budget, and Gert-Jan Koopman, the Director General for the EU budget, you will hear a lot about Next Generation EU, the ambitious programme to issue 150 billion euros per annum through 2026 to finance Europe's economic and social recovery. And this programme will comprise syndicated transactions, bill and bond auctions, and an ambitious, the world's largest green bond issuance programme. We're ready to launch this programme, and you'll hear more details about that today. We spent the last 12 months putting in place the machinery to allow us to implement this ambitious programme successfully. We're now at the starting line, waiting for the starting gun to go. We would not have made it to this point without the help of the institutions on my left, the European Investment Bank, the ESM, but also I'd like to say a word of thanks to the European Central Bank, which has helped us to build the accounts and payment infrastructure for the Next Generation EU. I think what we have achieved in this space in the last 12 months, we have achieved together. It has been a great act of EU institutional solidarity that has made all of this possible. And I'm very, very grateful to my colleagues for their help with staff, with expertise, with operational support. Right across the board, it has been a remarkable piece of cooperation between the institutions, and I think gives the truth to the concept of Team Europe. But I'm also very, very grateful for all the help that you have given us, the investors that have bought the SURE social bonds. You have given us great confidence that we can make this NGU a success. You've established us as a recognized credit, an issuer of large liquid bonds, and you've given us, I think, the belief that we can head into next generation EU in full confidence. So we look forward to your support and help. I think we count very much on you in helping us to provide the fuel that will help to pave the way for the implementation of the European Union recovery plan over the coming years. Thank you very much.
Thank you, Niall, and thank you, Bertrand. And it's great to be here amongst good friends again and organize this event for the third time. We also are extremely proud to be part of Team Europe, as our three institutions that you see here are playing an important role in Europe's crisis response to the pandemic, but also the growth to recovery. And we do this for you, for the investors, for the capital markets community, for the banks, everyone who is supporting us to become successful in this exercise. And one of you in one of the calls called us the 2 trillion club, because we have already 1 trillion in the market with Niall's additional issuances, Bertrand, ourselves. We are coming close to 2 trillion of safe assets that are coming to the market. And that's what we're here to talk about the future, about SSA markets, about safe assets, about economics, about how you as an investor think about us and what we can do to help and strengthen Europe. We are really trying to put ourselves in your shoes and try to explain how we believe capital markets will develop and what topics are, in our view, in your interest. We have a very broad program, as you have seen. We will speak about what makes Europe unique in the market, what makes the Brussels effect and the green taxonomy, which Bertrand referred to. So I think it is an interesting 2 times half days. And what is even more key for us, we do hope that this is the last time we do this virtually. And we really hope next time we can welcome you here in the heart of Europe, in Luxembourg. Now, allow me to kick off the program and introduce the 3 key speakers that will come after us. The first one, and I referred to him already, is Johannes Hahn, the Commissioner for Budget and Administration. He will represent the European Commission in the dialogue on sustainable recovery. Then Werner Hoyer, the President of the European Investment Bank, Bertrand's institution. And then finally Klaus Regling, the Managing Director of the European Stability Mechanism. The session will be moderated by Maria Tadeo. She is Bloomberg TV's European correspondent. Thank you all for joining us, and let's kick off this conference.
Excellent, very good. So of course, this is the first session of the day. We're joined by Commissioner Hahn. We're also joined by Werner Hoyer of the European Investment Bank. And we're also joined by Klaus Regling, who is, of course, the Managing Director of the ESM. But, you know, before we head into this debate, Commissioner, I have to ask you about the news that we just had over the past few minutes, in which the Commission has now mandated the syndication for next generation EU bonds. So this is happening today. What can we expect from it?
Well, it should take place tomorrow, as it is announced. And of course, it's the beginning of a rally. And we are rather confident that there is a huge interest. I think everything is well prepared. And also on our side, we managed to prepare ourselves. For instance, it was necessary to have all the approvals by member states to go to the markets, which we did in 5 months, actually. I'm saying this because last time when we had a similar situation, it took us 28 months. This time we could do it in 5 months And this is another proof how committed also our member states are to have this next generation EU in place.
Right. And you know, for everyone that's watching, and just to recap, this is the European joint debt that was agreed a year ago. It's a real breakthrough for the European Union, of course, to see the Commission tap markets in joint debt. And today the Commission has announced the syndication that will be run by a number of banks and executed tomorrow in the initial sale of those next generation EU bonds. But Commissioner, just to go back on that point, you know, how hopeful are you that this syndication is going to go well? I mean, have you sensed that there's a lot of appetite for this product out there in the market?
I'm deeply convinced that this is the case. We had a lot of investors' conferences in the last couple of weeks, and there was a huge interest. So I'm more than confident that the appetite is big.
And actually, precisely to your point, you know, we should highlight and also say that every time you've tapped the markets and joined debt, you know, I'm thinking the short program, you've been very successful. You know, it's been very oversubscribed. So now, you know, if we were to look at this from a bigger perspective, and I also want to bring in, of course, Mr. Hoyer and Mr. Eglin, you know, why is it that investors are so keen on this? You know, we talk about a breakthrough for the European Union. We talk about something that really just steps outside of the Rubicon, and it's really a watershed moment for the European Union. So is that understood, and just how significant is it that we're now in a position to say you're going for joint debt?
I believe investors' behavior has changed considerably over the last decades and years. And nowadays, criteria are important for investors which didn't play a role 25 years ago. Nowadays, investors come to us and they want to know exactly what are you going to do with the money that you raise from us. Is it really going to be for a purpose that we believe in? And nowadays, ESG criteria are key. So therefore, I think there is a very good opportunity that also this series of bond issuances will be very, very successful. I think the market is waiting for it.
And Mr. Regling, what's your take on it?
No, ESG clearly plays an important role. We know that everywhere around the world in markets. But I think on top of that, confidence in Europe is much, much stronger than it was during the last crisis. I think Europe has demonstrated that we can act very quickly. That's what happened last year with a number of packages already starting in April, and then the next generation EU adopted in July. And as the Commissioner said, fairly rapid implementation of this program. So I think the confidence in markets that Europe is able to react to a crisis is very strong today. And also any fear that existed 10 years ago, and which came back a little bit early last year when the pandemic hit us, that this might be negative for the euro, that there might be, as some people always speculate easily, there might be a breakup of the euro. All that has completely disappeared. And I think the package we have now put in place and will be implemented by the European Commission, Next Generation EU, will lead to higher growth rates in Europe in the long term. It's not only demand stimulus. We have a strong acceleration in growth right now and next year, according to the latest ECB projections, 4.6% this year, 4.7% next year. But the way Next Generation EU is designed, it's not only demand stimulus, it's really there to improve the supply side of the economy. As you know, countries can receive money from this package if they stimulate reforms, promote reforms, and put in place more public investment. And that's the best way to raise growth potential.
Great, and we're going to go into details about the recovery. But first, I also wanted to put that question to Commissioner Hahn. You know, Mr. Regling there made a very good point. 10 years ago, we were talking about the breakup of the euro, redenomination risks, countries that could have joined or opted out of the European Union. Now you're looking at major joint borrowing in markets. How significant is that change that we've seen in the past 10 years?
Yeah, it's another proof how advanced this kind of integration and cooperation is nowadays, because indeed, I remember I was already there in the Commission 10 years ago I think it took us almost 2 years to react at the last financial and economic crisis. Now this reaction time was much faster, also due to the developed instruments. Now we can so they refer and rely to experiences of the past. And it's also that it was a huge expression of solidarity that this was possible, but it's also, I think, as it was said, there is a huge interest on euro-denominated bonds, and also because it will help to create an alternative global currency. And also for this, I think we see this, if you said at the beginning, huge appetite. But important is, so to say, the internal situation, that the member states understood that only cooperation amongst them helps to recover quickly the single market.
And you know, Commissioner, just to wrap up on the initial points, you know, of course, Mario Draghi was famous by saying, you know, whatever it takes. And now we have Christine Lagarde at the ECB saying, don't bet against the central bank and don't bet against the euro, you'll be proven wrong. Is that an assessment that you share? Ultimately, the market, you know, there's no point betting against euro assets now?
I think so. I think the euro became a very, very strong currency. I'm proud about it. And actually, it will also help us, in particular outside the Union, to understand better what is the European Union, a political bloc, a supranational organization which is unique in the world. We have a lot of supranational organizations, but they are far away from that level of integration that the Union has. I mean, all the others are probably at the level the European Union was in the 70s or 80s last century. So we are much more advanced. We are indeed a political bloc, and this is now also expressed to this kind of action, which definitely helps all of us to recover, but not only to recover, but to become more resilient.
And, you know, speaking of resilience, you know, let's talk about the recovery and the outlook for the European economy. And Mr. Hoyer, you know, we have the European Central Bank, which is pumping so much money into the system, trying to stimulate the economy on that front. We also have the Next Generation package. And today, of course, that announcement of the initial sale of Next Generation EU bonds. So I wonder, how optimistic are you about the prospects for a quick recovery, but also, and I guess this is equally important, an even recovery in the European Union as to avoid that two-tier economy?
Let me put it simply in one sentence. We have learned. We have also learned from the mistakes we made during the financial crisis 10 years ago, because we reacted with more resolve and more quickly this time. And this was very important to give a European response to this challenge. The member states did a marvelous job. They immediately put into place packages that were very, very successful and helpful. But if each and every member state does what is necessary in that state, then there is a risk for the integrity of the internal market. And here it was very, very important from the beginning to make sure that we give a European response to this as well, also as a protection of the internal market. I remember vividly the first meetings of the Eurogroup when we discussed this issue together with the President of the European Central Bank. And she said, we need to have a European response that is fast, fat, and flexible. And that's exactly what we have done with the different instruments that have been put into place. And it is a signal and a symbol that we are standing here together today discussing the issuance of European Union bonds.
Right, and then you mentioned the single market, of course, which for Europe is really seen as the crown jewel. I mean, this is a huge market of almost 500 million people, you know, and cutting across 27 countries. And Mr. Reglin, you know, just to pick up on that theme of the recovery, you know, how optimistic are you that we're going to see a recovery in which Europe is able to gain ground quickly and not fall behind some of the other big economies? Of course, I'm thinking of China, the United States. There's been concerns at times that Europe is not as quick when it comes to the rebounding phase, purely because our stimulus is different in nature.
Well, on the one hand, it's true that we have seen throughout the post-World War period, in cycles, the US always moves out faster. The US economy is more flexible than most European economies. But it does not mean that the US standard of living is growing faster than the European. That's just not the case. We are a bit later, but then we catch up. For example, when I look at the latest OECD forecast that came out 2 weeks ago, this year the US grows faster than Europe. That's clear. Because they are more flexible, but also because the Biden administration put in place this tremendous demand stimulus program. But according to this OECD forecast, already next year, Europe grows faster than the United States. So this is a pattern that we have seen often. And the comparison with China is a little bit strange, to put it mildly. China is a completely different economy. They have had tremendous growth for 40 years, but still per capita income, per capita GDP in China today is only about 1/3 of Europe's GDP per capita. Of course, China will grow faster the next 20, 30 years if they put the right policies in place, and like they have done the last few decades. So catching up with China is a wrong concept. China is catching up with us. And because they have such a huge population, of course, their relative weight in the world economy will continue to grow. And that's not bad. If we get it right, we can benefit from that as well.
Right. And Commissioner, again, just to pick up on this point, because this is a real conversation in markets, when you look at the recovery in Europe and the recovery in the United States, I know you say that the recovery fund is seen as a medium-term boost for the European economy. When you look at the stimulus plan in the US, it was very much about cash in hand, about providing money quickly. So why is this plan and this European approach going to work, in your view, potentially better than that in the United States? And I wonder, can you explain a little, when you say this is a medium-term boost to the European economy, just how far down the line? Is this 2 or 3 years to see the full impact of it?
First, I think it's also important to recall that Next Generation EU is one, I have to say, a rather important instrument. As Werner Hoyer said, there's a set of initiatives also at the national level. And if you take all the different activities, initiatives and support schemes together, the European member states plus the European financial institutions plus the European Union itself, all together, the support counts for 6 trillion, which is equal 18% of our GDP. So the stimulus is a huge one. It was partly to react immediately to the crisis, but as Next Generation EU, it will also help us to pursue our political priorities. And this is to address climate change and to invest in digitalization. And that's why it is a medium, long-term investments, again, in more resilience, and I would say in much more competitiveness. And as we have, so to say, linked the provisioning of money to certain political, if I may say so, programs, investments in climate change, in the Green Deal, in digitalization. And by the way, we can see that the direction in the programs is in a way that, so to say, the minimum allocation for these areas is much more finally than it was originally asked for, is another proof that everybody is understanding we have to invest in the Green Deal, we have to invest in digitalization, and therefore I'm pretty sure, and if I look into the quality of the different programs, I'm rather reassured that it will be indeed a very targeted, lasting and sustainable investment.
Right. And, Commissioner, you make an excellent point there because, of course, you're tapping markets today, but this is also pending on plans being approved to member states. When you look at the different plans, the concern, of course, for some is that you're pumping so much money into an economy, but it may not actually work or it may not be effective. This time, when you look at the measures and the reforms that are being put forward, what makes you feel that this time it will be different, it will be effective, and will actually make a difference?
Well, because once again, we focus our investments indeed on certain areas. Green Deal, 37% of the money spent via Next Generation EU has to be spent for green investments, 20% for digitalization, we have the no harm principle. So it's not possible to invest in something which contradicts these political priorities. We have started to discuss with our member states since October last year about the programs. We have created a special general directorate, a special, if you like, task force to work with member states on the development of programs with all the experts and specialists of the Commission. We will provide technical assistance. So I think the setting this time is an excellent one. It's a comprehensive one. There's a general understanding amongst all the member states where this kind of investment has to go. I mean, Europe is leading by example. If I take the Paris Agreement, it was us who quasi spearheaded this process, and that's why we have a certain obligation, but it's also seen in the meantime as a business opportunity to invest in the Green Deal and in digitalization, and ideally to combine both.
Right. And, it's also interesting, when we look at the session, the three of you, well, I mean, you're from countries that essentially would be seen as, the core Northern European countries. And, I'm Spanish. I'll be seen as the person from the South. Normally in a debate would be, in theory, sitting in different sides of the table. But I wonder right now, when you look at Europe, how much of that is left? Or do you actually see that this time there really is a willingness to put away those differences, that ultimately they get exaggerated, and that there's actually a real willingness to work together and move behind those two lines? How compact is the EU at this stage?
I think already the fact that we could agree so fast about this program, and once again, more or less a year ago, the Commission made its proposal. Then we had the decision in July, the negotiations with the European Parliament, the decisions in December, now the different ratification processes in our member states, in parallel, the program work. So to have all this in place from a legal point, but also from a, let's say, programming within 1 year, from 0 to 100%, is a proof of solidarity and common understanding amongst member states. And may I say, the fact that we focus on resilience is also something where I think that in particular countries from the south are now very much interested to overcome their deficiencies from the past, but also in the center of Europe and in the north of Europe, I think there's a lot of necessary reform needed. So it's not that the one are the best performer and the other ones the less good performer. I think we all have to catch up, to become more resilient, to become more competitive, to learn our lessons. And in that respect, I'm rather confident that those who might be less well performing in the past have stood their experience. Yeah.
Right. And Commissioner, just to wrap up on this point, von der Leyen is the head of the Commission, is on a trip to a number of countries this week. That's a hint that perhaps plans could be approved as soon as this week. So when would we see the money actually start to flow into these countries? The 13%, the upfront payment, when is that going to happen?
Yeah, we will have tomorrow our quasi-launch event and action with the issuance of the first bonds. We will have another one still in June, and then another one most likely before the summer break as announced, and therefore I'm confident that the first money can flow indeed to the member states, I suppose somewhere in August, because it's about the approval not only by the Commission but also by the European Council, by member states. Then we have to agree about the so-called financial agreement, and on basis of this the disbursement can start. But I'm rather confident that all the needs and so to say the expectations can be served in due time.
Right. And, when I look at the details of the banks that are working with you, it is true that you have institutions from essentially across the world and you have 39 banks. I mean, this is a huge portfolio of banks that are going to be working with you. I wonder if that reflects also the investor appetite and the nationalities that you see this. At this point, when you speak to investors, is this about US investors, European, the big institutional ones? Do you have a mix, perhaps, of appetite here? I just wonder if you could paint a profile of potential buyers?
Well, what we could see in the past when we had this SURE program, which some consider almost as a kind of rehearsal for the now starting Next Generation EU, where we've finally managed to raise almost 94 billion since, I think, September, October last year. I think, of course, the big bunch was investors from Europe, but also from Far East. There have been some, for instance, from Canada. I mean, those who are interested to have a safe asset in euro denominated have, so they bought these bonds, and I expect a similar development also here. And the fact that we have 39 banks as in a primary dealer network also proves, so to say, the wide range of actors, but it's also an expression that we wanted to create a lot of ownership across Europe and even beyond, if I may say so, but in particular across Europe, to have many banks which have their, so to say, focus in one or the other country to participate, and therefore to make it really a European project also from that angle.
Right. And, Mr. Reglin, we've talked about the recovery, we've talked about the stimulus plan, now we've talked about the joint debt and the new programs from the European Union. And the other side of this equation would be inflation. I wonder, when you look at the macro dynamics in the European Union, how big a debate should inflation be? And I ask you this question because a lot of investors do tend to look at the United States and then translate dynamics that we see there into the EU. Is that fair?
Of course, there's a big debate in the markets about inflation. Central banks around the world have been trying for years to bring up inflation rates. I think the situation in the US and Europe is quite different in this respect. In the US, given that there's this huge package, which for this year it's much bigger than the European package, and it's only geared towards stimulating demand, that there are special concerns. And as you know, some prominent US economists have expressed that very, very clearly, like Larry Summers and others. I think in Europe, given that the quality of our support package is very different and better in my view, because it's spread over several years, it's designed to strengthen the supply side of the economy. I think, therefore, I would not be worried about a big jump in inflation. We know this year there will be an increase, but as the ECB said, this is temporary based on special factors. So I think markets are more concerned about inflation in the US and where it might develop. In Europe, there will be this temporary increase, and that's not bad. But in the long run, given the way our labor markets work and the way we design the support package, that potential growth can really go up. I think it's much less of a concern.
Right. And, the reason why I'm asking you this question, of course, is that if you're a bond investor and you fear this runaway inflation, then you could go, well, there's no value in fixed income. So what you're saying is that in Europe, you do not worry about this big overshootings in inflation. This is not something that's going to take hold, and we're going to see, runaway tick-ups in the economy.
Yeah, that's right. And I think that's also how markets look at it. Otherwise, there wouldn't be this huge demand for bonds issued by our three institutions. We have seen this very, very strong demand over the last 12 months. And you asked earlier about the composition of investors. And there I can remind you that there's a huge difference compared to 10 years ago when I began to build up EFSF and ESM and we issued our first bonds. At that time, the Anglo-Saxon world, London, Wall Street, were not interested in buying euro-denominated bonds because they thought the euro would disappear the next 5 years. That was the situation at the time. But I think markets learned then the hard way that betting against European policymakers, ECB, but also the policy world more generally, did not pay off. Those who believed that we would do the right things, maybe a bit slowly, but in the end, the right thing to bring the euro area back, they made good profits. So that's very different today. Today, I think the confidence in Europe is back, as I said earlier, and therefore we see very good demand from around the world. 10 years ago, I had to travel a lot to Asia and the Middle East to get investors interested. So that's much better now, and I think it reflects what we have been doing the last few years. We have, in principle, moved in the right direction. We are strengthening the single market. We are deepening monetary union. We are increasing the international role of the euro. And I think all that is appreciated by international investors as well.
Right. And you know, you make also a very good point. And also when you look at markets and the bets against euro assets, you know, if you look at spreads right now, they really do not show any redenomination risk. So you're very right to say the conversation is so changed in the past 10 years. And Mr. Hoyer, on that line still, you know, I wonder, you have a lot of experience into tapping markets. Of course, you're going to be doing this a lot for the next few years. We're looking at 80 billion this year, 150 in the next few years until 2026. Is there perhaps a concern that this is too much, that it's going to be difficult to place, or do you have it structured in a way that you can tap specific windows in the market of opportunity to go in and place it well?
I would say the most important thing is that we keep investors' confidence and trust. And that, by the way, will not depend upon the fact that these enormous amounts are going to be dispersed or made available. It will depend upon the decisions the member states take in accordance with the European Commission, what to do with the money. So project is the name of the game. We need to use this enormous flow of money in order to improve our competitiveness, our productivity. And this is indeed something where we have a gap that needs to be closed. Digitalization is often mentioned, but it has to go far beyond it. We are, for 16 years now, investing 1.6% of GDP less into research, development, and innovation than our competitors in East Asia and in North America. And that must change. And this is a wonderful opportunity. And if I look at the packages that some of the member states have submitted to the European Commission, then I'm quite optimistic. I'm even impressed by some member states. Some of those who were the suspicious ones 10 years ago, now all of a sudden they come with the most advanced ideas for the use of this money. And this is very, very encouraging. And that will stabilize or even raise investors' confidence.
So what you say essentially is that this is about proving that further integration is working and that positions have become much more aligned. That's the key to gaining that trust from investors.
That is true. And what we now have to do is translate all this into projects, and these need to be developed. And this is why I'm, from the point of view of my institution, I'm very delighted to see that member states see the need or the usefulness of combining the enormous funds coming from the European Union with the blending and lending and advisory capacity that the European Investment Bank can put to it. So it is a real European project that we are addressing here.
Right. And, you know, we've talked about those recovery plans and how there's this push for, you know, digitalization and modernizing the economy and making it green. Of course, a lot of this will also mean tapping into the green market, ESG and sustainable investment. We've seen a lot of money rotate into those areas. So, Commissioner, I wonder if you could, first of all, explain what the vision of the EU would be when it comes to green investment and also how you plan on financing those needs.
Well, what we have announced and committed ourselves is that 30% of our bonds should be so-called green bonds. We will start in autumn to issue the first green bonds. So this will amount to probably almost 270, 280 billion euro, which actually will lead to a doubling of the current global green bond market. And the intention is simply what I've said, to pursue our political priorities, to invest in the Green Deal, to address the climate change, and to have projects, and this is very important, what Werner Hoyer said, to have indeed projects which prove this approach, and that's why we have now in place a reporting scheme from our member states in order to quasi guarantee to the markets that indeed what we are saying, so to say, at the label is indeed also there in substance, because we have to be credible, we have to be accountable, and this is now also the case, and that's why we can start this process, and I'm sure that it will trigger a lot of additional activities in this area, and in particular on green bonds, we see, to speak with your words, a huge appetite, more maybe than even for others. I think for institutional investors, it's nowadays very important to have in their portfolios so-called green bonds, for example.
Right. And Commissioner, just to make it clear on that point, because that's so important for investors, that when they invest in something that is green, it actually turns out to be green in the next 5-10 years down the line. Would you say the EU is in a position to guarantee that what is presented as green will stay green?
Yeah, because we will be authorized by external companies association. In particular, we refer, like already for the SURE bonds, on the authorization by ICMA, the International Capital Market Association, but even another one, in order to have really this strong quasi authorization. And again, we have constantly to demonstrate and to prove that indeed the money raised under the label of green bonds is indeed invested for this. And I think we have a huge number of projects as part of this recovery and resilience plans in place, so that there is a huge guarantee, and understand that in many member states they will provide complementary national funding in order to further strengthen this dimension, considering as important also from the climate perspective, but also important as it is a huge demand by people. The sensitivity on this topic is huge, so politics has to react to it. And thirdly, it's also considered from our perspective as a huge job engine, because Europe was always strong on green technology, and it's another opportunity to strengthen, if I may say so, this leg, and to become a global leader in green technologies.
Right. And just to remind everyone that's watching, the European Union, of course, wants to be the first climate neutral continent by 2050 and cut down emissions majorly. Mr. Hoyer, going back on the green topic, it is fair to say that there's a global competition to enter that market, to make it sophisticated, and to get the legislation approved. I wonder, when you look at the European perspective, why does the European Union have a competitive edge that other countries don't? I'm thinking the UK, why would you want to invest in European green instead of other jurisdictions?
Well, again, I would say we have learned. We have learned since the first issuance of a green bond, which took place in 2007. It was an EIB green bond. And it was a surprise success, I would say, at that time. But very soon we found out that there are people on the markets who would cheat, who would contribute to greenwashing or whatever. As you said, if the label says green, you must reassure your investors that there is something green in it. And therefore, we contributed to the development of the green bond principles, and we are now contributing to what the European Commission is working on, the taxonomy, which is basically an instrument to make sure that we guarantee to our investors, and their confidence is key. We guarantee transparency, we guarantee accountability, and we guarantee reporting activity. And this is, I think, the key for success for the green bonds over the last 14 years. And this will be the key for the transparency and reliability of other, let's say, SDG-bound bond issuances soon. We have, for instance, already moved beyond green in the narrower sense to other eligibility spheres like healthcare, such as vaccines, for instance, and this is something that is being picked up by the markets very strongly as well. So I think we need to translate the experiences with green bonds into other fields in the service of the Sustainable Development Goals of the United Nations and the objectives of the European Union.
Right. And, the taxonomy is so important, to strip away the jargon. This is a set of rules that the European Union would use when it comes to those green assets. And, this is such a huge piece of legislation that the EU is working on. But Mr. Regling, just to wrap up this issue about the issuance, the appetite and the potential for the EU, I guess the thing for this to actually work and become effective is to become a very liquid market, to see that appetite, but also make it ensure that there's that liquidity. Will the EU be in that position, considering there's all of this bonds entering the market, but you're also competing with some of the sovereigns?
Yeah, but I think in this area, Europe is clearly in the lead. More than half the ESG market is denominated in euro. The EIB will continue to issue these bonds. The Commission started with SURE. They will do it tomorrow. ESM could do it if our pandemic crisis support is activated, which is a precautionary credit line not used yet. But if it's used, we would, from the ESM side, issue social bonds. And we agreed a social bond framework with the relevant institutions. So I think Europe is really in the lead here, and our investors know that. But of course, we are also happy if the rest of the world becomes more conscious and follows, because I think the world as a whole needs to fight climate change. So everybody who participates in this, the more the better.
Right. And again, just to underline, you do believe that this can be a profitable liquid market, essentially, the European tranche of this.
I think we have already demonstrated that, yeah.
And, we're entering actually the final minutes into this conversation. So I think, gentlemen, if you agree with me, I was hoping that each one of you would put their final takeaway, their final pitch from this session, summing up your ideas. And I was hoping to start with Commissioner Hahn.
Well, I think we are entering a new phase of European cooperation, European integration, European solidarity by launching the first bonds related to our reform and resilience facility altogether, Next Generation EU. So actually it's an investment in our next generations, not only the next, but also the next after the next. It should be seen as a long-term sustainable investment. Europe is trying to not only to learn its lesson, but to become even more competitive. It was said that others are catching up to the level Europe is. We have a European way of life which we want to protect, which we want to transfer into the future, and for this also we have to make ourselves more competitive, more resilient, and exactly this financial activity is contributing to this goal. And in that respect, Europe will be in the future a key global political player, and therefore, so to say, everybody who is interested in multilateralism, who is interested in a peaceful kind of cooperation, has to support this kind of approach.
Well, thank you, Commissioner. Mr. Regling, your final thoughts on this?
Well, I fully agree with what the Commissioner said. Let me just add that we will not stop here. The work will continue. It's never easy in Europe because we always have to find compromises among 27 countries in the European Union, 19 countries in the euro area. But I think the experience of the last 18 months has shown that we are able to do that. It can be noisy. It takes a bit of time, but it's unavoidable because we are not the United States of Europe. We still have 27 sovereign member states, and in the euro area 19. But we continue to work on it. For instance, we continue on deepening the monetary union. We continue to on the way to create a banking union. The next important step is when the ESM will provide a backstop to the Single Resolution Fund starting early next year. We are on the way to creating a capital markets union. We are thinking about fiscal capacity for macroeconomic stabilization. These are all important elements to make monetary union more resilient, less vulnerable in the next crisis, which will come. We don't know when and why, but we want to be stronger. And I think we are putting in place the right pieces for that, although it will take a while. Not everything will be ready next year, but we know our agenda.
Great. Well, thanks for that. And Mr. Hoyer, your final conclusions.
Well, I'm, as you have heard, very optimistic, but I must also say we should not paint the picture of Europe more beautifully than it is, because we have huge areas where we have a distance to the market leaders in technology, and therefore we need to catch up. And in the field of the green technologies, for instance, we are the market leader and we must expand that position, and this is why these programs are very, very helpful. And in addition to that, we have shown over the last year, for instance, what can be achieved if we invest wisely and with resolve into innovation. The development of a vaccine of the importance of the BioNTech vaccine, for instance, would not have been thinkable in such a short period of time just a couple of years ago. Normally, you might take 8 to 10 years. We did it in 1 year here in Europe. That is a huge success, and we must build on that. We must listen to Winston Churchill, who has given us the advice not to miss a good crisis.
That's a good point. Well, gentlemen, thank you so much for taking the time to join us. And of course, congratulations for that initial sale that we're waiting for the Next Generation EU. A lot of work has gone into this over the past year. And I'm Maria Tadeo from Bloomberg News. We've reached the end of our session. I want to thank everyone that joined and participated, and we hope to see you very soon.
Thank you.